Hi, today we're going to have a look at the 2016 Leaving Cert Higher Level Question 1. It's a company account including a manufacturing account. Again, with these, as all of these question 1s, we're giving a trial balance and we're given some adjustments. There are 9 adjustments to go through in this question. And then we have to prepare the manufacturing account, trading profit and loss account and balance sheet. So the first thing we're going to do is have a look at the notes. Note 1, it just gives us the stock on hand at the end of the year, the stock for finished goods, raw materials and work in progress. So there's no workings to do for Note 1. Note 2 says, included in the figure for sale of scrap material is 3,600 received from the sale of an old machine on the 30th of 2015. This machine had cost 18,000 on the 1st of the 4th 2010. So we need to do a note for that, Note 2. The first note we need to do is a sale of scrap material. So per the trial balance, the sale of scrap material is 6,100. Now the sale of the old machine should not be included in the sale of scrap material, so we need to take that out. So we need to take out 3,600 for the sale of the old machine, which leaves us with sale of scrap material of 2,500, and that will go on a line of its own in the manufacturing account. Because we sold the machine, we need to see whether we made a profit or a loss when we sold that machine. So to do that, first of all, we need to get the depreciation of the old machine. So from the question, we can see that the machine was purchased on the 1st of the 4th 2010 and sold on the 30th of the 6th 2015. We had it for all of 2011, 12, 13, 14, which would be 4 years. We had it for 9 months in the year we bought it and 6 months in the year we sold it, which would be a further 15 months. So it'll be 4 years and 15 months, or 5 years and 3 months in total. So we had it for 5 years and 3 months. Now the cost of the machine was 18,000. So to work out the depreciation for the 5 years, it's 18,000 multiplied by 10% is 1,800, and then multiplied by 5 is 9,000. And for the 3 months, if it's 1,800 for a year, divide that by 12, multiply it by 3, gives me the 3 months of 450. So my total depreciation for the old machine is 9,450. That will help us see whether we made a profit or loss in the machine. As we set up above here, the cost of the machine was 18,000. The depreciation we're after working out to be 9,450. So the cost less the depreciation will give me a net book value of 8,550. It says that we received 3,600. So if it's worth 8,550 and we only received 3,600, the difference between the two of those show that we have a loss of 9,450. And that loss on sale of machine will go in factory overheads in the manufacturing account. And the last note we need to do here is the cost of plant and machinery. So the cost of plant and machinery from the trial balance is 320,000. We sold a machine which had a cost of 18,000. So I'm going to take that away, and that will leave me with cost of machinery, plant and machinery of 302,000. The second, or Note 3. Note 3 asks us to provide for depreciation of plant and machinery at an annual rate of 10% of cost from date of purchase to the date of sale. So I need to do a note on depreciation of plant and machinery, and we may as well do a note on accumulated depreciation of plant and machinery also at this stage. So the depreciation of plant and machinery, as we can see from Note 2, the change when we sold this machine was at the end of June 2015. So the cost for the first 6 months were the same as the trial balance, 302. And then when we sold the machine, the cost for the next size is 320. And when we sold the machine, the cost for the next 6 months was 302,000. So let's work out the first 6 months is 320,000 multiplied by 10%. And then we're going to multiply that by 6 over 12 for 6 months. And for the next 6 months, the cost was 302,000. And again, I'm going to multiply that by 10% with the rate of depreciation, and again by 6 over 12 for 6 months. So the total depreciation of plant and machinery for the year is 31,100, and that will go as a factory overhead in the manufacturing account. The accumulated depreciation of plant and machinery. From the trial balance up above, we can see that plant and machinery cost 320, but at the start of the years were 245. So the depreciation must have been the difference between the two of those. So 320,000 minus 245,000. Then we need to add the depreciation for the year, which we will get from above here. The depreciation for the year is 31,100. And we're going to take away the depreciation of the old machine because we do not have that anymore. So less depreciation of old machine of 9450 leaves me with accumulated depreciation of plant and machinery is 96,650. On to note 4 now. Note 4 to do with sale or return. So it was discovered that the finished goods have been sent to a customer at the end of the year on a sale or return basis. These goods have been entered in the books as a credit sale of 15,000, which is a markup on cost of 20%. So that 15,000 is 120% of cost. Now, sale or return is where we sell, we give something to a debtor and they can buy it if they want. It's not an actual sale. They have the option to return it to us, so it shouldn't be treated like a sale. So the first thing we're going to have to do anyway is to get the cost price. But we have the selling price. So in the question, it tells us that the selling price was 15,000. And that selling price is 120%. So to get the cost price, I'm going to get my 15,000 divided by 120%, multiplied by 100%. The cost price is 12,500. Now, the first accounts going to be affected here are sales, because we didn't actually sell this. It was sale or return, so the option to return it, so it shouldn't be treated like a sale. So it's going to have to come out of sales. So my sales for the trial balance are 1352000, and we're going to take out the selling price, which was 15,000, which leaves me with sales of 1337000, and sales will go in the profit and loss account, the top of the profit and loss account. Debtors, again, we're going to have to take out of debtors because they don't owe us the money for it yet because they have not agreed to buy it. So debtors from the trial balance are 52,000, and we're going to have to reduce that again by the selling price of 15,000, which leaves me with 37,000. And because we have not sold these goods, they shouldn't have been taken out of stock, so we have to add them back into stock, and stock is always valued at cost price. The lower of cost price is the selling price, which is usually the cost price, and it's the cost price in this case. So the closing stock of finished goods per note 1 is 77,600, and I'm going to have to add back in the sale or return, the cost of the goods for sale or return of 12,500, which will leave me with 90,100. And closing stock of finished goods, it goes in cost of sales in the P&L, and it's a current asset in the balance sheet. Note 5 is the suspense note. And there's usually two things going on in the suspense note, separated by the and here. So the first thing that's going on, it says the suspense figure arises as a result of a discount allowed, 1,200 entered only in the debtor's account. So the two accounts that are going to be affected are the discount account and the debtor's account. Now sometimes the easiest way to see what's going on here is to do up little T accounts. So the discount, first of all, I'm going to put in the figures and the balances from the trial balance. The discount from the trial balance, and that's a net account. It could be a debit or a credit, it could be income or an expense, but in this case it's a credit of 6,000, so I'm going to put that in red there, 6,000. And debtors from the trial balance are 52,000. Now they were reduced up here by 15,000, so I may as well put up the most up-to-date figure of debtors, which are 37,000. And that's coming at most up-to-date figure for debtors. It's not from the trial balance, it's actually coming from note 4. Now, if I go back again just to quickly read what it says in the question, it says it was a discount allowed entered only in the debtor's account. So if we allow a discount, we should debit the discount because it's an expense to us. We should credit debtors because it reduces the amount they owe us. Now, in the question, it says it was only entered in the debtors account. So it was entered in the debtors account, so the debtors account is fine. It wasn't entered in the discount account, so I need to put it in the discount account, 1200 in the discount account, and the opposite will go into suspense, which are included in general factory overheads here of 1200. And again, quickly, I'm just going to put in the trial balance figure for the general factory overheads, including suspense in red, of 86,400. So it was put in debtors, it wasn't put in the discount, so I needed to put in discount, and then it'll always go in the opposite side of the suspense account. So that's the first part of the suspense note done. The second thing here, it says there's a credit purchase of raw materials, 5,000, entered on the incorrect side of the creditor's account. So for purchase raw materials, they should have debited purchase raw materials and credited creditors. So the two accounts here, we're going to be talking about the purchase of raw materials and creditors. And again, I'm going to put in the trial balance figures. So it's for the purchase of raw materials is 424,200, and for creditors is 49,400. And now just to quickly go back and look at the question, it says there's a credit purchase of raw materials 5,000 entered on the incorrect side of the creditor's account. So if it was entered on the incorrect side of the creditor's account, it should have been credited creditors. It was debited to creditors with 5,000. So to fix that, we're going to have to put 5,000 to fix it, to balance it, and another 5,000 to correct it. Because instead of putting 5,000 here, we put the 5,000 here. So we need to put 10,000 here effectively to cancel it. So I'm going to put my 10,000 there, and again, the 10,000 will go in the opposite side of suspense. So now to do up the notes for this, the first T account here, the discount account, we need to do a note on that. So in the trial balance, as we said, it was a credit of 6,000. Now we're after debiting with 1,200, so that's going to reduce my credit balance by 1,200. So now my credit balance for discount is going to be 4,800, and that's going to go in operating income into P&L as it's the credit balance. My general factory overheads, including suspense, I don't need to do a note on debtors because actually it was entered correctly in the debtors, so that's fine. I need to do a note on general factory overheads, including suspense. So from the trial balance, it's 86,400. Then I'm going to take away the discount error of 1,200 because it's the opposite side here, it's a credit balance, so it'll reduce my debit balance. And I'm going to add the 10,000 for the creditor error because it's on the same side, it's a debit balance also, to increase the 86. So in total, my general factory overheads, including suspense, are 95,200. Purchases of raw materials, I don't need to do a note on because it was entered correctly there. It was a creditor's account that was incorrect. I need to do a note on creditors. So from the trial balance, creditors is 49,400. And the 10,000 is also a credit entry, so that's going to increase by 49,400 to 59,400. And creditors will go in the balance sheet as liabilities less than 1 year in the balance sheet. That's note 5 done. Note 6 is the bank reconciliation note. So note 6 says the figure for a bank in the trial balance has been taken from the firm's record. So we have in our accounts, we have a bank overdraft of 42,600. And we know it's an overdraft because it's on the credit side of the trial balance. So 42,600 of an overdraft. However, a statement arrived at the end of the year showing an overdraft of 36,300. A comparison of the bank account and the bank statement revealed the following discrepancies. So usually the first two entries here affect our accounts. And the last one is an outstanding check that we have written but hasn't hit the statement, so that will affect the statement. So the first entry was a check of 800 received from a debtor had been dishonoured. This has not been entered in the book, so we didn't know about this. We need to take account of that €800 dishonoured check. So the first thing we're going to have to do is change our debtors. Now, the most up-to-date debtors figure from note 4 is 37,000. But now there's a dishonoured check. So we're actually owed another €800 from debtors from the standard check. So now debtors are 37,800 and they will go in current assets in the balance sheet. The bank overdraft, as we saw a few minutes ago, from the trial balance is 42,600. But now there's a dishonored check, so that person hasn't actually paid us, so we're owed that balance again. So that is going to increase our overdraft of 800, because we would have initially put in that we received that money. Now we didn't, so our overdraft is going to go up, so by 800. So it's now 43,400. The second part here of the bank reconciliation says that there was rent of 5,100 for 6 months ending on the 30th of 2016 was paid directly into the firm's bank account, so we weren't aware of this. So we're after getting 6 months rent of 5,100, but 4 of those months are for next year. So we received the 5,100 into our bank anyway, so that's going to reduce my bank overdraft because I received 5,100, which now gives me an overdraft, bank overdraft of 38,300, and that goes in liabilities less than 1 year in the balance sheet. Per the trial balance, if I go back and look at my trial balance, rent, I can see here down below, rent is 8,500. And again, you just have to be careful at rent, and the same with discounts and commission and stuff like that. They can be either income or expenditure. Now in this question, rent is a credit balance of 8,500, so it is income. So it's 8,500 income. I received a further 5,100. So when I add that on, in total I've received 13,600. But of that 5,100 I received, of that 6 months, 4 of those are for next year. So I'm going to have to get my 5,100 divided by 6 multiplied by 4 to work out my prepaid amount, which is 3,400. And at the end of the year, as we said in other videos, you add what's due, you take away what's prepaid. So I'm going to take away the prepaid amount, which leaves me with the rent income for the year of 10,200, and that will go in operating income at the P&L, and the prepaid bit is a liability less than 1 year in the balance sheet because it's rent income prepaid, so effectively someone's overpaid us rent and we owe them back that rent. The last part of this we don't actually need to do anything with because there was a check of 2,000 issued to supplier has not been presented for payment. So we wrote this check and we're aware that this check was written, it just hasn't hit the statement. But what we can do is a little reconciliation to check our bank figure at this stage. To do that, we take the figure from the statement. So the figure from the statement is 36,300. But they are not aware of the outstanding check, which has not been cashed. So if I add that 2,000 on, it gives me 38,300, which is the same as our bank overdraft figure of 38,300. So now the bank is reconciled, and we're happy that 38,300 is the correct figure. Note 7. Note 7 says, during 2015, Ryan Limited built an extension to a warehouse. The work was carried out by the firm's own employees. The cost of their labour, 12,000, is included in factory wages. The materials costing 28,000 were taken from stock. No entry has been made in the books in respect of this transaction. So even though the work was carried out by the firm's own employees, at the end of it, we are going to have a fixed asset of the buildings worth 40,000. So what we have to do is take the 12,000 out of the factory wages, we have to take the 28,000 out of purchases, and we'll have to put them into the fixed asset buildings as 40,000. So the first note was direct factory wages. Now direct factory wages from the trial balance are 220,000, and we're taking out the work done by the firm's own employees of 12,000, which will leave me with the direct factory, that should be 220,000, which will leave me with direct factory wages of 208,000. Purchases of raw materials. So from the trial balance we can see the purchases of raw materials are 524,200. I'm going to take away the cost of the materials used by the firm's employees of 28,000, which leaves me with purchase of raw materials of 496,200, and that will go in the manufacturing account. And these have to be added into the factory buildings. So from the trial balance, factory buildings are 930,000. And I'm going to the cost of the materials used by the employees to build this building. I'm going to add in the wages, and the materials. I'm going to add in the 40,000, which means that my fixed assets will now be, my fixed asset of factory buildings is now 970,000, and that will go in the fixed asset note in the balance sheet. Note 8, provide for a recent wage increase of 5%, which has been backdated to cover 6 months from the 1st of the 7th, 2015. So it's a wage increase of 5%, and it's all to do with 2015, for the last 6 months of 2015. So direct factory wages were after changing up above here. So my most up-to-date figure for direct factory wages is 208,000. I have to add in the wages due, which was, if I go back and look at the note, it says provide for a wage increase of 5%, which has been backdated to cover the first 6 months. So the wage increase is 5% of 110,000, which is 5,500. And I'm going to add that on, because it's wages due, I'm going to add it on to the 208,000. And the wages due is going to be a liability less than 1 year in the balance sheet, and the total direct factory wages are going to go as a direct cost in the manufacturing account. Note number 9, provision should be made for the following: investment income due and debenture interest due. So first of all, we look at the investment income. If I go back to my trial balance, I can see that the investment income investments, they're 4% investments, and they were acquired on the 1st of the 5th, 2015. So we had those investments for 8 months. So if 315,000 by 4% by 8 over 12, that comes to 8,400. Did we receive any investment income? If we look down through the trial balance, it doesn't say anything about investment income received, so they are all still due at the end of the year. So the investment income for the year, that will go in operating income in the P&L is 8,400, and the investment income due, which will go as a current asset in the balance sheet, is also 8,400. Debentures, if we go back to the trial balance, we can see that the debentures are here 8% debentures, and at the end of the year, they're 375,000, but that includes 60,000, which was issued at the end of April. So for the first 4 months, they were 375 minus 60, would have been 315,000 for the first 4 months, and then for the next 8 months, they were 375,000. So we're going to have to split them in 4 months and 8 months. So the 4 months are 315,000 by 8% by 4 over 12, and then the next 8 months are 375,000 by 8% by 8 over 12. So in total, they come to 28,400. And that 28,400 is going to be taken away at the bottom of the P&L. It's also going to go in liabilities less than 1 year in the balance sheet to debenture interest due, because again, none of that has been paid in the trial balance. And the last note we have to do here then is note 9. We have to create a provision for bad debts equal to 4% debtors. So because we're creating the provision, there is no bad debt provision already, so there's no increase or decrease in bad debt provisions. We're just setting one up. So the bad debt provision, now to get the provision for bad debts, it says that it is 4% of debtors. we need to have the most up-to-date debtors figure for that. So debtors from note 6 are 37,800. The provision is 4%. So 37,800 multiplied by 4% is 1512. So that bad debt provision will go into selling and distribution expense in the P&L and will also take it away from debtors in the current asset note in the balance sheet. So that's all our notes done. Now we have to do the accounts. So the first account we're going to do is the manufacturing account. The first thing that will go in the manufacturing account is the opening stock of raw materials, and that's coming directly from the trial balance, which is 46,500. Then we're going to have to add in the purchases of raw materials, which I'm going taking from the notes. There's a change to purchases of raw materials. So the most up-to-date figure for purchase of raw materials are 496,200. So I'm going to add those, which give me 542,700, and I'm going to take away the closing stock of raw materials, which is coming from note 1 in the account. Note 1, 36,100, and I'm going to take that away. 36,100 is coming from note 1 in the question. There's no change to that 36,100. Next, I'm going to have to do my direct costs. So my first direct cost is direct factory wages, and there was a change to that. So if I go back to my notes, I will see direct factory wages are 213,500. I'm going to have hire of special equipment, which from the trial balance is 35,700. And I'm going to have royalty payments, which again from the trial balance are 30,500. There's no change to those. So they are going to total 279,700. And that's going to give me a prime cost of 786,300. Now, the next thing I have to do, I'm going to have to add my factory overhead expenses. So my first thing are going to be general factory overheads, and that's where suspense was included. So that was definitely changed back here. Note 5, so it's 95,200. I'm going to have depreciation of plant and machinery. Again, I've done a working on that. So depreciation of plant and machinery from note 3 is 31,100. I had a loss on a sale of machine, which again was coming from note 2 as far as I remember. Loss on sale of machine 4950. So in total, those factory overhead expenses come to 131,250. And that will give me a factory cost of 786,300 plus 131,250 of 917,550. Now I have to add my work in progress at the start of the year, which I'll get from the trial balance is 33,200. And I'm going to have to take away my work in progress at the end of the year, which I will get from note 1 of 34,200. Which leaves me with 916,550. And the last thing I have to do, that's my cost so far, 916,550. I have to take away the sale of scrap material because that will reduce my costs. And sale of scrap material from note 2, it was one of the first notes we did, is 2,500. So if I take that away, that gives me a cost of manufacture of 914,050. Manufacturing account done. Now the next thing we have to do is the profit and loss account. So the first thing that will go in the profit and loss account are sales, and there was a change to sales as far as I remember from one of the notes. So sales, it was, if I go down to my note on sale or return, there's a change to sales and it's now 133,700. That's cost of sales, my heading opening stock of finished goods I will get from the trial balance, So the opening stock of finished goods of 48,100. I add my cost of manufacture, which is a final figure from my manufacturing account, 914050. So that gives me 962150, and I'm going to have to take away my closing stock of finished goods, and there's a change to closing stock of finished goods. So here it is in note 4 of 90,100. So that gives me a cost of sales of 872050. And that will leave me with a gross profit of sales less cost of sales, leaves me a gross profit of 464950. The next thing I have to do is take away my expenses. So my first expense is going to be administration expenses. So administration expenses I can see from the trial balance. I don't think there's any change to those. If I look through my trial balance are 49,200. So they will go in here, it's 49,200. And then I have to put in my selling and distribution expenses. So the bad debt provision was the very last note we did. The bad debt provision is 1512, that's selling and distribution expense, and also selling expenses, which are 36,300, and they are coming directly from the trial balance. There's no change to those. So that leaves me with total selling and distribution expenses of 37,812, and that leaves me with total expenses of 87,012. So my gross profit less my expenses will leave me with 377,938. I have to add my operating income. So the first operating income was the discount received, and there's a change to my discounts here in note 5, so that's 4,800, and also the rent for the year, and again there was a change to rent here in note 6, so that is the income is 10,200. So in total my operating income comes to 15,000. So I'm going to add the 377,938 plus the further income of 15,000 to leave the operating profit of 392,938. I have to add my investment income, which I worked out in note 9. So if I go down to note 9, I can see my investment income for the year was 8,400. So I'm going to add on the 8,400, which gives me 401,338, and I'm going to take away my debenture interest, which again came from note 9, the 8,400, leave me with a net profit of 372,938. Now the last thing I have to do is take away my dividends. So my dividends are from the trial balance. Dividends paid are 22,500. So 372,938 minus 22,500 are 350,438. That's my retained profit for the year. Then I have to add on my profit and loss balance at the start, which I will get from the trial balance. The profit and loss balance from the start, the third figure of the trial balance, is 68,900. I'm going to add that on to the retained profit for this year, which leaves me with retained profit and loss balance at the end of the year of 419,338. And that is my balance sheet done. Sorry, my profit and loss done. The last thing I need to do is my balance sheet. So in the balance sheet, the first thing we're going to have are fixed assets. So the cost of factory buildings, I've done a note on cost of factory buildings, where the one employee did the work. Here is 970,000. Accumulated depreciation of factory buildings. Again, I should have a note done for accumulated depreciation of factory buildings. If we don't have a note done for the depreciation of factory buildings, we might have to do one. Now it doesn't say anything about, it doesn't give us a depreciation rate for the year for the factory buildings, so we might probably just have to take the depreciation from the trial balance, and we can see that factory buildings in the trial balance, the cost is 930,000 and they're now worth 910,000, so the depreciation must have been 20,000. And it doesn't give us any depreciation rate for this year, so we can't work it out. So it's just 930,000 minus 910,000. The depreciation must have been 20,000. And that's coming from the trial balance, the top, very top of the trial balance. Plant and machinery. The cost of plant and machinery, we can see from the question, we've note done on plant and machinery here. So cost of plant and machinery is 302,000. We also have a note done on accumulated depreciation of plant and machinery, which came to 966650. So that will leave me with a net book value of 205,350. Again, I'm just going to add these down now, put double lines under these because I'm not going to use them again. So the total net book value for fixed assets are 1155350. Financial fixed assets. So my first thing that's going to go in here are my investments. So my investments come to 315,000. Which leaves me a total fixed assets of 1470350. Current assets. In my current assets, I'm going to put in all my closing stocks. So closing stock of raw materials is coming directly from the question. There's no change to that. It's 36,100. Closing stock of work in progress, again, is directly from note 1 of the question, 34,200. There's no change to that. And closing stock of finished goods, there was a change to closing stock of finished goods. So I need to go back to my notes and take the most up-to-date figure for closing stock of finished goods of 90,100. So in total, my closing stocks come to 160,400. My debtors, I can see from note, the last note that we did, the most up-to-date debtors figure was from note 4, was 37,800. We can take it from here, same thing, 37,800. And I'm going to have to take away my provision for bad debts of 1512. I'm just put in the 1512 and take it away. So 37,800 minus the provision of 1512 comes to 36,288. And the last thing I'm going to put in here is my investment income due. That's owed to us, so that's going to be an asset. And I worked that out in note 9, investment income due. None of it was paid to us, so the full amount is still due of 8,400. So in total, my current assets come to 205,088. Our creditors amounts due within 1 year. The first thing that's going to go in here are creditors. And there was a change to creditors, so I'm going to have to go back to my notes and look for my most up-to-date creditors figure, which is 59,400. Then I have a bank overdraft, and again that would have changed in the bank reconciliation note. So I have to go back to that note and get my most up-to-date figure for bank overdraft, which is 38,300. Rent prepaid, so the 4 months rent prepaid, they will go in here as 33,400, and that won't be a minus, it'll be a plus because it's liability. 3,400 rent, we go back to somebody, it was rent income that was prepaid to us. We also have wages due, which I had a note on. So the wages due are direct factory wages due here are 5,500. That's a liability less than 1 year. PAYE, PRSI, USC, there's no change to that, so that's coming directly from the trial balance of 46,100. And the debenture interest due, we did a note on in note 9. So we'll go back and take our figure for debenture interest due, which is 28,400. Again, none of that has been paid, so the full amount is still due, 28,400. So creditors' amounts falling due within 1 year come to 181,100, which leaves me with a working capital. If I get my current assets and take away my liabilities less than 1 year, leaves me with a working capital of 23,988. And if I add that to my total fixed assets above, leaves me with total net assets of 1,494,338. Now, financed by creditors' amounts due after 1 year, 8% debentures. So the full debentures will go in here at the end of the year, the full 375,000. Our capital and reserves. So we've authorised and issued share capital. So the authorised share capital, from the very top of the question, we can see that the authorised share capital is 600,000 and the issued share capital is 500,000. And the preference shares, we can see that the preference shares are 250,000, are the authorised, and the issued preference shares, we can see from the trial balance, the issued preference shares are 200,000. About 3/4 way down the trial balance, 200,000. I'm going to total these and put a double line underneath that, so we won't be using those figures again. So the total issued share capital comes to 700,000. My profit and loss figure then is just going to come from the bottom of my P&L, which is 419,338. Then 700 plus the 419,338 gives me 1,119,338, and that added to the liabilities greater than 1 year above gives me 1,494,338, and that is my balance sheet balance. I hope that helps you, and I'll try and do another question 1 soon. Thank you.